There's a lot of balls in the markets. All the markets are bouncing back. The tech giants are making bold moves, and Warren Buffett is teaching us investment lessons. Let's unpack some of this. The U.S. stock market is back in action with surprising third quarter rally. Sectors like the tech sector and the healthcare sector, they are leading all this inflation. The Federal Reserve's also softened stance on interest rate, and this has boosted a lot of investors' confidence. But challenges remain about geopolitical tensions and energy price spike. All this could shake things up. What are the lessons we need to learn? Even in tough markets, there's always a chance to win. Next is Alibaba's big move. Alibaba may sell a 5% stake in Chanchao, its logistics arm. Chanchao is crucial to China's e-commerce dominance and global supply chains. The sale could unlock cash, but also comes with a regulatory risk in China. For investors, it's a peek into Alibaba's treasury chest risk and high reward. A lot of investors are thinking about, okay, if we want to go for high risks, then we get high reward. But if we want to play small, then it's not a place you want to play in. Let's go next into what we have. Warren Buffett is making headlines again, investing in Domino's Pizza and U.S. home builders. Domino's aligns with his love for simple, timeless businesses. The home builder stakes also shows confidence in the housing market. Even with rising rates, what are the lessons we need to unpack? Focus on essentials, what people always need. That's his investment strategy, like homes and food. If you focus on those, you're going to make a truckload of money, and it's one of his investment principles when you study Warren Buffett over the years. From resilient markets to bold strategies, the global economy reminds us to stay alert. There's always something to learn and maybe a chance to invest. Next, we'll be taking a look at what is happening in our domestic market, the NGX. We'll see the top gainers, the top losers, and the all-share index, whether the market is closing on a positive note. We'll be right back for the NGX. This market closed the week on a positive note, with the all-share index rising by 0.5%. Quite a positive day for the market. It settled at 97,722.28 points. The market capitalization reached 59 trillion naira, 59.21 trillion naira as a matter of fact. It reflects sustained investors' confidence throughout the trading week. Trading activities remain robust as 295 million shares were exchanged, valued at 6.76 billion naira across 8,433 deals. Remember that yesterday we had about 7,000 deals, but right now we're seeing more deals in the market. The all-share index, see it on your screen, 97,722 points, 0.5% gains in the market. Quite a bullish day. The bulls are taking over. 59.21 trillion. Let's take a look at the top gainers. Unicel topping the list, 11 naira 99 kobo, 10% gains in the market. The bulls taking over. As regards Unicel, Flour Mill is the next, 78.65, 78 naira 65 kobo, 10% gains in the market. John Holt is the third on our list, 7 naira 72 kobos. John Holt has been consistently amongst the top gainers in the last 1 week. Quite an amazing time for a lot of investors who are investing in John Holt. 9.97% gains in the market. Cornhall PLC, 1 naira 88 kobo, 9.94% gain. Shuna Assurance has also found itself among the top 5 gainers. They've been consistently excluding 2 days in the last 1 week. Suna Assurance, what is it they have up their sleeves? I'm sure a lot of investors we have there and say it's quite an amazing time for Sunu Assurance. In the last 2 weeks, they've been featuring among the top gainers. 2 naira 72 kobo, 9.68% gains in the market. Let's see who made it to the bottom of the pyramid this time around. The top 5 losers on our list. Deep Cap topping the chart, 1 naira 9 kobo. That's 9.1% decline in the market. The Bears are literally taking over. Ikeja Hotel is the next amongst the top 5 losers, 7 naira 50 kobo. 8.54% decline in the market. Dow Communications, 58 kobo. That's 6.45% decline in the market. Dow Communications has featured in amongst the top 5 losers in the last 3 days. It tells us investor sentiment as regards this particular stock. Universal Insurance is among the top 5 losers as well. 5.88% decline. FitSyn, it's been a long time we've seen FitSyn featuring among the top gainers or the top 5 losers. Right now they're found amongst the top 5 losers of the day. 14 naira 10 kobo. 5.69% decline in the market. We'll edge into what is happening in the most traded stock. Access Corporation, 33 million shares are valued at 826 million naira. Now, remember we had a conversation yesterday about Access Corporation. Lots of acquisition in the market, but it's not reflecting on the market capitalization and even the price in the market. It looks like a friend who keeps on eating but doesn't tend to gain weight. That's what we're seeing in the market. Access Corporation, Zenith Bank, the next on our list as regards the top 5 traded stocks. How many banking stocks do we have? 2 banking stocks. Oh my goodness, 2 banking stocks. It's literally reducing by the day. Cornhall PLC, 20 million volume of shares, 36 million naira. Universal UCAP, we have them 19.12 million naira, 327 million naira. 19.12 million shares traded, I beg your pardon, 327 million worth of those shares. Suni Assurance, top 5 traded stocks. 13.39 million shares traded, and it gives us a value of 35.18 million shares traded as regards Sunu Assurance. This strong close to the trading week highlights lots of resilience in the market and literally tells us investors' sentiment as regards the close of the market. Up next, we'll be talking about the pulse of the day. But before we go to the pulse of the day, we have the currencies. The Naira currently sits at 1,669 naira 40 kobo. The Ghanaian cedis 15.96 Ghanaian cedis, and the South African rand 18.16 South African rand. See what is happening in the northern region of Africa. Moroccan dirham 9.97 Moroccan dirham, and the Egyptian pound 49.35 Egyptian pound. The Kenyan shilling has been stable for a long time, 129.22 Kenyan shillings. I'm sure a lot of Nigerians are going to be excited if it's their currency that is that stable as that of the Kenyan shillings. Up next is the pulse of the day with Onome of Ovoriole, the lead analyst, Money Africa. We'll be right back. This is Market Pulse. Picking up the pulse of the day. Now joining us is Onome of Ovoriole. You're very much welcome to the pulse of the day. Lead analyst, Markets at Money Africa, I beg your pardon. You're very much welcome to the pulse of the day.
Hi, Frank. How are you doing?
Amazing, amazing. But how amazing am I doing based on this current inflation figure was saying 33.88% in October, and it's driven by soaring energy costs and currency pressures. What's your take about this, and how do you think this would affect investors' confidence as regards the mode of doing business in Nigeria?
I mean, the rise in inflation was expected because fuel prices play a key role, and so as fuel prices, we had fuel prices go up, so it was kind of expected. As for investor confidence, I think the bigger issue that investors are worried about is probably stability in the business environment, policy stability, certainty in policies, and all that. We've had double-digit inflation for quite a while, and yes, inflation in the last 1 year has been a bit high. But if it's the exchange rate, I think the exchange rate is probably a bigger headache than inflation, because some of the volatility you're seeing in the exchange rates as it continues to depreciate is going to feed into inflation. So I think that's a bigger headache than when rising inflation. Once you have some stability in oil prices, then you have better food production. Inflation should gradually trend downwards.
Okay, let's talk about the elephant in the room. The federal government's decision to issue a $1.7 billion Eurobond, and this is just to fund its 2024 budget. It's a bold move, yes, obviously. What do you think this means for Nigeria's creditworthiness and investors' confidence? Do you think that this could spark foreign direct investment, or we're walking in tightrope as regards the country's debt?
I mean, we're still walking in a tightrope. The bond, the large chunk of debt that the country has is in Naira, which is a good thing. But when you look at the quantum of debt, and when you look at the fact that government revenues are pretty poor, in some ways it feels like the only option left, which you're going to say maybe in the short term, is that you're going to see still borrowing elevated. So as for the timing, you have the US cutting interest rates. So it's obvious that emerging frontier markets like Nigeria would find it easier to raise money. So it's not bad timing. I know people might say, well, 2024 is almost over. Why are you raising money now? But the timing, I mean, you just have to take opportunity or take advantage of the timing, because you can't predict how next year is going to shape out. Yeah.
Okay. The worst job to have right now is that of the CBN, to be the central bank governor, because everyone is literally looking at him to solve the issue of inflation. Now, this is the second month we're seeing inflation rise. And remember that all of this is against the backdrop of consistent rise in inflation since second quarter of this year. Now, what do you have to say regarding addressing inflation and using monetary policy? Do you think it's a priority right now to control inflation while ensuring economic growth, especially in a tight fiscal environment?
I think that for the CBN governor, right, and just the CBN as a whole, we're seeing the rise in the interest rates are kind of nearing, some would argue are already nearing the limit of effectiveness.
Yeah.
The biggest headache right now in Nigeria, the two biggest headaches you have are inflation and exchange rates. And both are not entirely in the hands. In fact, you'd say both are more of a fiscal issue. A lot of the inflation you're seeing is because we have elevated government spending. But it's also difficult to slow down government spending when your economic growth is rather tepid. So it's a catch-22 situation. Do you want to deal with inflation and bring it down even if you have some pain? Or do you want to keep spending, push up inflation, and deal with it later? But inflation is a bigger problem to deal with. And so as much as possible, you want to bring inflation down. And so you have to choose which is the lesser evil, which is more important for you.
So
both at the same time.
It's more or less between the chicken and the egg. Which do you think you're going to pay more attention to? Inflation and then also maintaining economic growth because of what is happening with our interest rate. It has increased to nothing less than 27%. And if you look at that, that's really making the business terrain quite tough. What's your take about that?
I mean, yes, you can say that, but the reality is, even at interest rates at 27%, inflation is what, 33%. So you're still, I mean, you have negative real returns by the time you deduct it. You can't have both. I believe that dealing with inflation is a bigger priority than growth right now. We've had poor growth for the last 8-10 years. So really, the argument that high interest rates are filtering into poor growth, yes, to some extent that's true. But even when interest rates were low, growth wasn't fantastic. So you can't really blame interest rates for poor growth.
All right. Let's talk about Nigeria's plan to raise funds through international capital market. This is a significant step. Yes, quite all right. But what ripple effect do you anticipate on local equities and the fixed income markets? Because remember that all of this is against the backdrop of the Trump forthcoming administration. There are lots of speculations about further rate cuts in the US and capital flight in this country. So we need to find the balance with the equities market and the fixed income market.
For the equities market, I mean, it's mixed fortunes, right? So banks have somewhat had it good because of the movement in the exchange rates. Banks, I mean, head or tail, banks always have a game in town to play. So if you have high interest rates, interest income goes up. You have a devaluation, FX gains, and FX trading income goes up. So the banks are doing fine. Manufacturing is struggling. Fast-moving consumer goods is struggling. The rest of the economy is struggling. I don't think that the Eurobond raise will have any impact on equities. It's not going to draw funds away from equities.
Is it going to bring in funds
into equities?
Is it going to bring in funds? Because the equities market, a lot of analysts have been saying we're waiting for that 100,000 points level and perhaps even the 60 trillion market capitalization level. Do you think it's going to bring in more funds into the equities market?
I mean, the challenge with foreign investors and Nigerian equities is that the macro environment is poor, so it won't bring in more funds. If I'm a foreign investor, if I want to do anything in Nigeria, I probably would do, fixed income. Okay. So it's not going to bring in more funds. We need confidence. You need a better macroeconomic environment, and then you have foreign investors coming. Are the stocks cheap? Many of the stocks are cheap, but the question is, do you have an environment that is conducive for these companies to have recovery?
All right. Thank you for joining us on Nomer Ovovoriole, the lead analyst, Money Africa. You said many of the stocks are cheap, but I'm sure a lot of Nigerians will be looking at Seplat and saying, oh, at 6,000 naira per unit share, I'm not sure that's cheap. Anyways, up next is Key Metrics. We'll be right back. But diving into the story of Dangote Cement, a company that is more than just numbers, it's a cornerstone of Nigeria's development. Now imagine every major bridge, road, and housing project you've seen recently. There are chances that Dangote Cement had a hand in building it. I always say that it's more or less the foundation of Nigeria because literally everyone breathes and lives Dangote if we're talking about his market share in the cement industry. They control over 60% of Nigeria's cement market, making them the go-to name for infrastructure. But being at the top isn't just about dominance. It's also about the numbers behind it. Picture a share of Dangote Cement sitting pretty at 478 naira. That's more than just a number. It's a testament to the company's solid fundamentals and foundation in Nigeria's industrial landscape. Their growth is driven by Nigeria's infrastructural boom and export opportunities across Africa. Of course, every success story has its hurdles, and Dangote Cement is no exception. Running operations with heavy reliance on diesel and gas, it feels like trying to sprint on shifting sand. The energy cost is also something that is unpredictable. Add currency volatility to the mix, and you'll get the kind of challenges that keep business leaders awake at night. But like Nigeria, Dangote Cement and its story is one of resilience. When you see a new housing estate or hear about Nigerian exports making waves, Dangote Cement is quietly in the background, shaping the narrative. They're a symbol of Nigeria's economic potential, balancing challenges with opportunities to literally stay vital and remain a vital player in the economy. That's it on today's episode of Key Metrics. Dangote Cement isn't just a company, it's a part of the Nigeria's DNA. And I guess that's why we're seeing Dangote going ahead in the oil and gas sector. He's done that and conquered it in the cement sector and playing big in the cement in the oil and gas sector. In the first quarter of 2025, he has said that he's going to list on the floor of the NGX, and that is going to be a mover and a shaker in the floor of the NGX. We keep our fingers crossed and await what the market is going to see and what the market is going to experience when they IPO on the floor of the NGX. That's it on Market Pulse. We'll be leaving you with the International Market Index. My name is Frank Fagbo. Stay with us every weekday, 4 p.m. West African time on NewsCentral in partnership with Nairametrics. We'll leave you with the Global Market Index.